Should you buy Sofi stock? How does Sofi Technology stack up against their fintech competition? Hey there, financial enthusiasts! Today, we're diving deep into the world of fintech and taking a closer look at Sofi Technologies. The question in everyone's mind, should you grab a slice of the Sofi pie? And how does this fintech giant stack up against its competition? Buckle up because we've got some insightful analysis coming your way. Picture this, a financial world where tech and finance collide to redefine the way we manage our money. That's what Sofi Technologies is all about. But with so much buzz and excitement surrounding this fintech wonder, it's time to separate the signals from the noise and get a clear perspective on what's driving this company's stock. Hold on to your seats because today, we're delving into not one, but two intriguing articles that shed light on Sofi's recent earnings report and what it could mean for investors like you. With titles like Sofi's earnings report was rock solid, here's why the stock is a screaming buy, and ignore the post-earnings retreat and keep betting on Sofi stock, it's clear that there's some intense debate in the financial arena. Are you ready to cut through the noise, analyze the facts, and figure out if Sofi Technologies is a potential game changer in the world of fintech? We've got you covered. Stay tuned as we dissect these articles, break down the insights, and get to the bottom of whether Sofi stock is a buy, hold, or sell. So grab your financial thinking cap because this is a ride you won't want to miss. Sofi's earnings report was rock solid. Here's why the stock is a screaming buy. First, we're diving headfirst into the fintech realm to dissect an intriguing article that has everyone buzzing about Sofi Technologies. If you've been following the financial landscape, you might be aware of the mixed sentiment surrounding this company. And that's what we're here to unravel. Picture this. A visionary entrepreneur named Chamath Palihapitiya steps into the spotlight, creating waves with his support for special purpose acquisition companies, SPACs. One of the gems that emerged from this SPAC surge is none other than Sofi Technologies. You might recognize Sofi from its catchy commercials or even its namesake NFL stadium, but there's so much more to explore beneath the surface. And that's where this article comes into play. Strap in as we dissect why the stock is down despite Sofi's rock-solid Q2 earnings report and how this company stacks up against its competitors in the fintech arena. Sofi's mastermind at the helm is Anthony Noto, a seasoned finance guru with stints at Goldman Sachs, Twitter, and even the NFL. Noto's impressive background serves as a solid foundation for Sofi's operations, and the company's acquisition spree is a testament to that. From banking as a service with Galileo to the tech-rich platform of Technices, Sofi is building an impressive roadmap to success. But what's driving Sofi's expansion? Well, it's all about evolving into a banking powerhouse right at your fingertips. With over 6.2 million members and a whopping 9.4 million products being used, Sofi's cross-selling strategy is paying off big time. In Q2, their revenue soared by 37%, with the financial services sector leading the charge. Now, when it comes to valuation, things get interesting. While Sofi might seem like a modern spin on traditional banking, it's trading at a lower valuation than its private competitors like Stripe, Chime, and Plaid. But don't let that fool you. Sofi's appeal goes beyond the surface. Some argue that its sticky user base resembles that of a high-growth software as a service or SaaS company, adding a layer of complexity to its valuation. So what's the verdict? Is Sofi an undervalued gem? This article dives deep into why Sofi might be the misunderstood star of the investment landscape, from its evolution into a non-stop banking shop to its potential as a SaaS-like entity. Sofi's story is anything but ordinary. So fellow financial adventurers, get ready to dissect the reasons behind Sofi's stock performance and uncover why this fintech marvel might just be the diamond in the rough. Ignore the post-earnings retreat and keep betting on SoFi stock. You know the story. You followed the advice, bought the stock, celebrated SoFi's stellar earnings, and then bam, a post-earnings retreat. So what's the deal? We get it. Seeing SoFi stock down 18% after soaring highs can feel like a roller coaster ride that's taken an unexpected twist. Those shares that were once worth $10 now seem to be playing a tune around $8.17. Frustration, disappointment, and maybe even a hint of bewilderment. It's all understandable. But here's the thing. Let's not confuse investing with speculation. The earnings report you cheered for? It actually ratified SoFi's business model in this ever-changing climate. The short-term market moves? Think of them as the weather, unpredictable and often influenced by a myriad of factors. Let's address the elephant in the room, the headwinds SoFi is facing. We can't ignore the risks tied to its crypto business. Now, crypto, it's like that elusive enigma wrapped in mystery. Some swear by it, while others steer clear. The government is cooking up a novel activities supervision program, giving banks in the crypto arena a taste of heightened scrutiny. This could potentially lead SoFi to halt trading in certain assets. There's a level of uncertainty, and let's face it, uncertainty can be a buzzkill for stock prices. And then there's the student loan business. Remember, SoFi began as a student loan refinancer. The catch? The repayment moratorium is coming to an end. But hold on, JP Morgan Chase's Reginald Smith throws a curveball. He's not entirely convinced the student loan market is the massive opportunity SoFi thinks it is. Smith crunches the numbers and estimates a $90 billion market, while SoFi's optimism places it at $200 billion. Only 2% of student loans got the refinancing treatment in 2019. Smith argues that most borrowers are better off sticking with their federal loans or opting for an income-based repayment plan, a difference in perspective to say the least. Now, let's ride the tailwinds that have propelled SoFi into the spotlight. Remember the SPAC craze? Yeah, it was a mixed bag, but SoFi was a shining exception. It's not just dipping its toes in the finance pool, it's taking a deep dive. Wholesale and retail business. Meet Galileo, SoFi's platform with APIs that connect its capabilities to existing systems. Blend that with the tech prowess of Technisys, a banking software company SoFi snagged. The vision? To be the AWS of fintechs. If Amazon's AWS unit aims to dominate the AI game, SoFi is eyeing a similar feat in the fintech universe. Let's talk banking business. SoFi's got a smart strategy. It's reeling in deposits with up to 4.5% interest on savings, while charging interest rates from 9% to over 20% on loans. Some might call it risky, but we call it banking. And the numbers don't lie. Revenue growth is sprinting at 37% annually, crunching those non-cash costs, and voila, SoFi boasts margin of 16%, double the figures from a year ago. So here's the golden ticket. The pandemic and the recent banking whirlwind might have delayed the golden age of banking, but when interest rates eventually ease, and they will, banks like SoFi will be right where the sun shines the brightest. And remember the government's crypto crackdown? Some might see it as a storm cloud, but we think it could actually be a silver lining for SoFi. With its focus on attracting young, sophisticated savers, SoFi might just steer clear of the run risks that took down other banks. Sure, there's been a bit of rain on the parade, but guess what? We're not folding our umbrellas just yet. And that's it. We hope you enjoyed this video. If you did, don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one.